Most people think Bitcoin is the currency of crypto. It isn't. Bitcoin is the asset. The currency that keeps the entire crypto market moving is something else. It's called USDT. Every single day, hundreds of billions of dollars worth of crypto trades are settled using it. Not dollars, not euros, not pounds. USDT, a digital dollar, not printed by the United States, not issued by the Federal Reserve, but created by one private company. And here's the strange part. Millions of people trust it every day, without ever asking who created it or what actually backs it. When I first entered crypto, I didn't ask those questions either. Like most beginners, I only cared about one thing: buying Bitcoin, maybe Ethereum, maybe the next coin everyone believed would explode. But after spending more time trading, I noticed something that completely changed my perspective. Every exchange looked different. Different interfaces, different coins, different countries. Yet one thing never changed. BTC paired with USDT, ETH paired with USDT, SOL paired with USDT, BNB paired with USDT. Almost every major cryptocurrency was being traded against USDT. That's when I realized something. People may enter crypto with dollars, or euros, or even Nigerian naira. But once they're inside the crypto market, most trading happens in USDT. Bitcoin may be the king of crypto, but USDT quietly became its money. That discovery led me to a much bigger question. Why would an industry created to remove trust from banks end up trusting one private company with hundreds of billions of digital dollars? To answer that, we have to go back. When Bitcoin launched in 2009, it solved one of the biggest problems in finance. For the first time in history, two strangers could send money across the internet without asking a bank for permission. It was revolutionary. But Bitcoin had one major weakness. It wasn't stable. One month it could gain 30%, the next month it could lose 40%. For investors, that volatility created opportunity. But for traders, businesses, and anyone who simply wanted to preserve their money, it created a serious problem. Imagine selling your Bitcoin today, only to watch the value of your cash replacement fall tomorrow. Crypto needed something different, something that moved as fast as Bitcoin, but behaved like the US dollar. That's where Tether entered the story. In 2014, a company called Tether introduced a simple idea. For every one USDT created, there would be $1 worth of reserves backing it. One token, $1. Simple. Or at least, it sounded simple. The crypto industry embraced it almost immediately because it solved a problem nobody else had solved. Traders finally had somewhere to park their money without leaving the crypto ecosystem. Instead of cashing out to a bank, they simply moved into USDT. When they wanted to buy Bitcoin again, they used USDT. When they wanted to buy Ethereum, they used USDT. When markets crashed, they held USDT slowly. Without most people noticing, USDT became the financial plumbing of crypto, including my own trading. I used USDT almost every day. I trusted it. Not because I had studied the company, not because I had read its financial reports, but because everyone else trusted it. Binance supported it. Bybit supported it. Almost every exchange supported it. If all these billion-dollar companies trusted USDT, I assumed somebody had already checked everything. I was wrong, because while the entire crypto industry was building on top of Tether, a completely different story was unfolding behind the scenes, and almost nobody was paying attention. That story finally exploded into public view in 2021. The Commodity Futures Trading Commission, one of America's top financial regulators, found that Tether had made misleading statements about what backed its digital dollars. The company agreed to pay a $41 million penalty. Earlier that year, Tether and its sister company, Bitfinex, also reached an $18.5 million settlement with the New York Attorney General. Suddenly, the company behind crypto's digital dollar was making headlines for all the wrong reasons. For many critics, this was supposed to be the end. If confidence disappeared, USDT would collapse. And if USDT collapsed, the entire crypto market could follow. But something surprising happened. Nothing. People kept using USDT, trading volume continued growing. New USDT was issued, more exchanges adopted it. Trust didn't disappear. If anything, it became even stronger. That fascinated me, because finance usually works the opposite way. Bad news destroys confidence. Yet Tether seemed to survive every storm. Then came the biggest test in its history. In May 2022, the Terra Luna ecosystem collapsed. More than $40 billion vanished from the crypto market in just a few days. Panic spread everywhere. People suddenly questioned every stablecoin, including USDT. For a brief moment, USDT lost its $1 peg. It traded below $1. Social media exploded. Some people believed this was finally the collapse they had been predicting for years. Investors rushed to redeem billions of dollars worth of USDT, but Tether processed those redemptions. The peg returned. And once again, USDT survived. That moment completely changed how I looked at the company. Not because it proved Tether was perfect, but because it proved something much bigger. USDT had become infrastructure. And people rarely notice infrastructure until it breaks. Think about electricity. You don't think about it every day, you simply expect it to work. The internet is the same. You don't think about undersea cables or data centers. You simply open your phone. USDT quietly reached that same position inside crypto. Millions of people use it every day, without thinking about the company behind it. Today, USDT settles hundreds of billions of dollars in trading volume. It is used by traders, businesses, freelancers, and institutions, and ordinary people living in countries where holding real US dollars is difficult. Bitcoin may be the most famous cryptocurrency, but USDT became the money moving through the entire crypto economy. Does that mean Tether deserves blind trust? No. Questions about transparency, reserve quality, and regulation still exist, and they should. Whenever one private company becomes this important, scrutiny is healthy. But one thing is impossible to ignore. Without USDT, the crypto market we know today would probably look completely different. Bitcoin started the revolution, Ethereum expanded it, but Tether quietly built the financial rails connecting almost everything together. Sometimes, the most powerful company isn't the one everyone talks about. It's the one doing the quiet work behind the scenes, the company almost nobody notices, until they realize the entire system depends on it. This is Gazetter, where we don't just explain crypto, we uncover the businesses quietly shaping the future of money. If you enjoyed this documentary, subscribe, because the biggest stories in crypto are usually the ones hiding in plain sight.